back to another trading video, and today this is on part 2 of inverse fair value gap. So in the previous video I was teaching you what it means, how it looks, how to use it, all that nonsense, blah 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 blah, not nonsense, very useful tools to use. But in today's video I'm going to show you it on the charts, and this is actually perfect. Very easy to spot. One of the ICT concepts, if you know what that means. One of those very easy ICT concepts to spot. So let's spot them right now. We got a bullish inverse fair value gap already. So we have a fair value gap first. We spot it. And we can see that the candle broke above this first candle low, forming an inverse. And what happened? Price continued up even higher. All right. Very simple, very easy. Let's try and see if we can find a bearish fair value gap where price disrespected it. We can see that previous fair value gaps we were teaching in the video, did not delete them. All right, so we can actually see, no, we need a bullish. So it's very easy to spot. You just gotta spot them. Let's see, very candlestick pattern. Oh, there we go, one right here. One kind of example of one right here. Anyways, but an example is an example. Actually, we have a perfect example right here too. There's two examples in this chart. All right, we have the bottom of the first candle and the top of the high of the third candle forming a gap, and the middle candle is green, forming a bullish fair value gap. But what happened after? This candle just broke it entirely, going below, breaking the low of the first candle's high. And what happened? Price just continued on going down. Oh my gosh, could you have seen that coming? Yes, I could have. There was another example. Let's see, right here. So boom, the first and third candle don't matter as long as they form a gap. The second candle or the middle candle is green, telling us that is a bullish fair value gap. What happened? This candle broke the low or the high of the first candle, forming an inverse fair value gap, which is now bullish, and price went down. I know price continued up high, but this could have been a good indication that, hey, get out of this trade. You know why? Because yes, it went up even high, but we actually have this gap that it respected too, that it went down, and eventually you would have lost a lot more money anyways. All right, essentially, actually once these bullish fair value gaps turn into an inverse, you can actually see that price tends to act as a magnet to these targets as well. So price went up, and this is supposed to be a bullish fair value gap, but since I got inverted, it is now a bearish inverse fair value gap. What happened? Price went up to this level and went back down. So essentially like the opposite of a fair value gap. And I'm pretty sure I said that in my part 1 video. All right, actually let's spot one more. Let's take off this. This is indicator I was using. Session times. So a very useful tool. I recommend get used to it. I'll teach about session times in a later video. But let's spot one more fair value gap, inverse fair value gap. Very easy to spot. Let's see if we can spot them. Perfect. We have one right here. All right, top of the first candle and the bottom of the third candle. Oh my gosh, what happened here, guys? What happened? So yes, price did bounce off of this level, acting as a magnet, and went up. What happened after? Completely broke. This candle formed a body. The body formed, breaking the high of the first candle. No, the high of the first candle, and went down. And what happened? Acted as a inverse fair value gap. Price went back to this level and went down. So if you entered in longs at this price right here, you would have been in a profit. But as soon as it broke, you would have been like, oh, now's my time to go. Accept the loss. You just lost some money, guys. You just have to accept it. I'm sorry. It's a part of the game. You will lose in trading. But if you have a strategy and a good mindset, psychology, what was the third one? And discipline, psychology, mindset. It was mindset, strategy, and risk management. So this helps with risk management. There's a lot of drawings. you will eventually win a lot more than you lose. You will lose, of course, but you're gonna win a lot more with those three in hand. All right, let's spot one more. That's it, just one more. All right, we have one right here. The bottom of the first candle and the top of the third candle. The middle candle is red, telling us that is a bearish fair value gap. All right, what happened? Price went down, acted as a magnet, bring it back up, and got bounced off of it, but then the price disrespected it, forming a candle right here, broke above the low of the first candle, and what happened? It just went extremely up. So if you entered in a shorts, you should have just exited out at this level, somewhere right here. Why? Because it's telling us that price is gonna go up. All right, essentially as a warning sign that, hey, price is not respecting this fair value gap. It's an inverse actually now, so boom, you should actually exit out the trade. It's essentially telling you a warning sign. All right, so this is a rule you should add to your, I don't know, rules of books of rules, whatever, and respect it and follow it. But that is it for today's video. I'm pretty sure that was like pretty short. Yeah, pretty short video. If you have any questions, please comment down below, and I will see you guys in the next video. Please like, comment, please share with all your friends. Josh Trade Awards on YouTube and TikTok. And that is it for today. This is Josh Trade Awards, and I'll see you guys in the next video. Peace.